Welcome to Financial Futures, the podcast series powered by doValue. In each episode, we explore the evolving landscape of financial sustainability, from smart investment strategies and debt management to ESG practices and economic resilience. Join leading voices from across the industry as we uncover insights, share experiences, and shape tomorrow's financial future together. In our debut episode, we lay the foundation for everything to come. What exactly is financial sustainability, and why is it becoming a global priority? From personal finances to national economies, we explore the principles and practices that support financial sustainability. Today, we dive into financial sustainability, what it is, why it matters, and how individuals and countries can build a more stable future. I'm joined by Mr. Francesco Bicciato, Executive Director of the Italian Sustainable Investment Forum, and Mr. Nikolaos Philippas, Professor of Finance at the University of Piraeus in Greece and Chairman of the Hellenic Financial Literacy Institute. Let's get started. Let's start with the basics. What do we mean by financial sustainability for individuals, businesses, and governments? Mr. Bicciato?
Okay, good afternoon, everybody. And the question is quite interesting. And in our idea, the basis of financial sustainability is the integration of ESG criteria in financial processes and products. This is quite important to underline the issue of integration because it's not something complementary to the economic and financial analysis, but it's something inside of the analysis that we allow to select the portfolio with this criteria. The main characteristics are long-term perspective, another important issue, intergenerational justice and equality, environmental conservation and commitment to social equality. The link to the real economy is another important issue that is a typical criteria of a ESG approach. Sustainable finance is exactly the opposite of speculative finance. So it's not a short-termism approach, but it's a long-term approach.
I totally agree with Mr. Bicciato. I would also like to add that financial sustainability is a mindset, especially after the financial crisis of 2008 and during the pandemic. We've realized how important it is to build resilience, not just for governments and companies, but for individuals too. For families, it means having long-term financial planning, emergency savings, insurance, and avoiding over-indebtedness.
You both come from countries that faced major economic challenges. How have Italy and Greece worked to rebuild financial sustainability?
Yes, we can say the characteristic of sustainable finance is the resilience. And this is exactly what we lived during our economic crisis in Italy. In difficult context, from economic and social point of view, Italy has always experimented a very strong growth regarding financial sustainability. I remind, just to give you an example, the pandemic period. During COVID period, the sustainable finance increase and not decrease, and in some cases the underperformance was less than the non-financial aspect, non-ESG aspect lead. So the issue is that there are two key actions for achieving financial sustainability: building trust in our country and investing in the financial literacy of the general public. These are the two main pillars that I think that is quite important to take into consideration. And to strengthen its financial sustainability, Italy is working to monitor and control public debt and increase transparency. Of course, public debt is the main problem that we lived and we are living right now in Italy. Some data show significant growth of sustainable finance, like I mentioned before. Take into account that between 2018 and 2025, ITASIF members, the members of our forum, have increased by 110%, while sustainable investment in Italy from 20 billion euros in 2018 have gone beyond 450 billion euros in 2023. So this very strange situation, I mean, there's a sort of counter trend that we lived, and even in economic difficulties, we noticed an increase of ESG approach.
Mr. Philippas, what about Greece?
In Greece, the sovereign debt crisis showed us the dangers of short-term financial thinking. The debt-to-GDP ratio in Greece reached about 220% in 2021, although it is now on a downward trend and stands around 160% in 2024, which is still very high. Rebuilding credibility and fiscal stability has taken time, and it's also required raising awareness and helping the public understand what was at stake. Financial sustainability is not only about state budgets, but about creating a responsible financial culture among citizens.
Another issue is inflation, which has become a big concern again. What is its impact on sustainability?
Inflation poses risk to the purchasing power of the population, of course, so it's something that we have to keep under control. The price instability undoubtedly affects financial stability. For this reason, the ability of sustainable finance to anticipate ESG risks and to guide investment towards the real economy, together with a greater prudence in an inflation period, have produced an effective barrier against the distorting effect of inflation.
Mr. Philippas, what is your point of view?
I would like to mention an example that demonstrates that inflation is especially dangerous for people without strong financial literacy. It silently erodes savings. Greece, for example, inflation averaged around 9.3% in 2022, while deposit interest rates were only about 0.5%, resulting in depositors losing roughly 8.8% of their money's purchasing power over the year. It's very impossible. But this is the reality. If we don't plan with inflation in mind, through smart investing in national diversified portfolios or inflation-linked instruments, we risk undermining our long-term goals, such as the quality of our lives.
Let's bring it back to individuals. How can education contribute to long-term financial sustainability? Mr. Bicciato?
Education can make a key contribution to long-term financial sustainability, and through financial education, people learn how to manage money with a long-term perspective, aiming for their life goals and working to build the world that they want to leave the future generation. So education is crucial, is one of the main important issue in order to increase and improve the movement of sustainability.
Mr. Philippas, your view?
Exactly so. Financial education is the key to long-term financial sustainability, empowering individuals to make informed decisions, avoid debt traps, and build resilience against financial shocks. If people understand how to manage their money, reduce debt, and plan for retirement, they make more sustainable choices. At our institute, we focus on early financial education as well as programs for adults to help citizens protect their financial future.
So it seems financial sustainability isn't just about having enough money. It's about making responsible, informed, and long-term decisions. Thank you both for your insights. Next time, we'll look at financial literacy, how we learn about money, and what we still need to learn. Thanks for joining us on this first episode of Financial Futures by doValue. Financial sustainability starts with awareness and continues with action. If you found today's discussion insightful, stay tuned for upcoming episodes where we'll go deeper into the key forces shaping sustainable finance across Europe and beyond. Find our episodes on Spotify, follow us on LinkedIn. Until next time, remember, the future of finance isn't something we wait for, it's something we build. Thank you.